Hi, good afternoon. Can the folks at the back hear me well? Thank you, thank you. Very nice to meet everyone. Joseph Lim from Tribe, currently heading the accelerator team. So I'll be the MC and later also the moderator. So given we are still in the midst of the pandemic, some quick house rules before we carry on. So there's gonna be we need to ensure social distancing, so 1 meter between participants, and if you are gathering in a group to talk, keep it to 8 folks at one time. And also please keep your mask on at all times. After consuming beverages, please get them on immediately. And yep, next, just quick introduction about ourselves. So we are hosting this, we are from Tribe, we are hosting this together with the team from Bridge Plus, Alibaba Cloud, and Stacks. So Bridge Plus, we are tenants of Bridge Plus, which is the space by Capital Land. So they've got this space and over on level 6 and 7. So they've kindly provided us with the venue. Drinks are provided by Alibaba Cloud, and together with the Stacks team, we put together a panel and just wanted to bring people together, like-minded people, to discuss these topics in commemoration of Earth Day, which is tomorrow. So for Tribe, just to give you a quick introduction, we started as an accelerator, so we're working with the Singapore government. So we've been working with startups, government agencies, corporates, and innovation is really a key of what we do here. So we've currently got 3 arms. We've got a think tank called Open Notes. We've got Tribe Academy, which we've been training talents, working together with government, training talents for folks like PayPal, like C Group. And we also have an accelerator program where we work with startups, typically pre-series A, and work with them on go-to-market opportunities. So next slide. Okay, next slide. Oh, yep. So actually, all the folks that we are collaborating with here are actually our partners. So if you are an organization interested in the innovation space, feel free to reach out to us. Interested to collaborate in terms of thought leadership for technologies, accelerator programs, education, and training. Next slide. And yep, without further ado, love to invite the other panelists onto the stage. So yep, joining us today, we have Take You, Kui Fei, and Benjamin. So we can sit maybe in this order. Are we sharing the last mic or? Okay, cool. So yeah, without further ado, just quick setting the context before we have our panelists introduce themselves today. So in today's panel discussion, we want to be focusing on how there's a convergence of ESG, financial services, and technology. And loosely speaking, we consider this Green FinTech, and we want to see how organizations can further push this to drive more positive impact on the environment. So in today's discussion, we have individuals from different places of the ecosystem, and I'll let them introduce themselves. So maybe we can start from Ben.
Thanks. It's too long since I've been using a mic, sorry. So anyway, good afternoon, everyone. Thanks for coming. It's really great to have a physical event finally. So thanks to everyone who made it, and I hope that we have a great day today. But anyway, my name is Ben. I'm the founder and managing director of Stacks, Singapore FinTech company. We are building solutions of our blockchain technology infrastructure, many of which are very targeted towards ESG and green financing. So we're hoping to share more and also learn more today. Thank you.
My name is Kui Fei. I'm from the FinTech Innovation Group at MES. So one of my role is really about FinTech ecosystem development, and of course, Green FinTech plays a large part in this, yeah.
Yeah, I'm Take You. So I currently the chairman of the Singapore FinTech Association Subcommittee on Sustainability. Real job, Oliver Wyman partner, senior leader for Singapore.
Real job, quite like that. But yeah, so as seen, we have quite a diverse profiles of individuals in this space. And I think we want to keep going back to the topic and each of us giving us the specific lens from whether a technology provider or as a regulator or even as an ecosystem player. So I think just to kick it off, want to be talking about macro trends. So what have we been seeing in acceptance of fintech in the ESG space? How has the attitude of the market changed over the last couple of years? So invite any of the panelists to just kick it off.
So I think maybe I can start first. So obviously, green fintech is a new buzzword, similar to what fintech was, I would say 5 years ago, where we see that there is opportunity for technology companies to play a part in the financial sector, be it reducing costs, improving efficiencies, enabling greater access. So similarly, what it means for green fintech is really about as we push towards the green finance agenda, going green as a whole for Singapore, for Asia, I mean, even throughout the world, green fintechs can potentially play a role in enabling some of these or unlocking certain doors, enabling cheaper market access to with regards to green financing, or at least attracting green financing into Singapore and so on. Yeah.
Yeah, I think the question is almost around what is fintech, right? How do fintechs contribute? So if you cast your mind back, a lot of you are in the fintech space. Fintechs were, addressing a lot of problem statements around financial inclusion, around making funding available to the smaller SMEs, to the underserved community. So it's the same thing now, right? The same underserved community, well, it's actually finding it hard to move and transition from whatever they're doing to a more green environment, right? So even funding of solar panels, right, in smaller factories, right? How accessible is funding that way for them, right? But the underlying technology that fintechs have brought, whether it's in the data side, whether it's in blockchain, right? Whether it's really using, IoTs, right? To actually, measure or even to obtain the data, measure, and then to verify it. All this sort of technology, we are trying to see how do we apply into the green world.
Thanks that you just explain what we are doing. But anyway, in the last few years, we do see a macro trend towards green fintech, because I think it's a partnership between fintech companies and financial institutions. So I do think that in the macro sense, definitely there's a lot more focus on ESG right now, and banks are having the responsibility, okay, fairly or unfairly, on them right now to be able to help in tracking the greenness of a project. So that's where I think there's a lot more that technology can enable. We are not really just, while all those things about democratization and improving access is good, the greater impact could be made if we are partnering with the financial institution, which already has millions of users. And so that's why I think I value truly a partnership between an institution and a fintech to be able to enable such green sustainability finance.
Yep, and I think this topic is huge, right? It's not a problem that we can try to solve this year. It's a multi-stakeholder, many years of in the making for people to collaborate together, right? So I think we want to highlight in these scenarios, what are the roles of the different stakeholders, right? So maybe we can start from Kwei Fei's view on what do you think the role of the regulator is in pushing this agenda?
So I think, okay, just to clarify, I'm not in the regulator role, so I can't, I mean, although I'm in MES, but I don't, I'm from the promotional development side of the house. But really, obviously, the regulator plays an important role because we talk about disclosures and reporting. I mean, banks have to report to MES, so that we can do an overall assessment of financial stability with regards to environmental or climate risks. But in terms of what we do at the FinTech Innovation Group in terms of developing the industry, how can we attract or develop the Green Finance Center here in Singapore? How do we make Singapore the Green Finance Hub? And specifically with Green FinTech, how can we encourage the industry to basically collaborate or pilot technology solutions to solve some of the problem statements in the industry? So bringing back to 5 years ago again, when we started on a FinTech journey, is really about how do we help the industry or encourage the industry to offset some of these costs or the uncertainties when you embark on a new technology projects, because obviously, you know, there are risks. You got to balance between, I think the topic of this is sustainability versus profitability, right? So you got to balance that. And that's where we can come in with regards to providing grants, co-funding of projects, whether it's POCs of actual implementations. Another aspect is really creating opportunities, because while this may not be such a big problem about, you know, FIs not wanting to talk to fintechs and so on, we are already way beyond that. Our FIs are talking to fintechs. It's about really thinking out of the box on how we can then translate the technology that may not be so common, like for example, using IoT devices. These are not general fintech companies, but how can we think about adopting such technologies? I mean, how can banks think about adopting such technologies to, you know, improve or better monitor or track the performance of a project or a green bond or a green loan? Yeah.
So I think you talk about ecosystem. I actually find sustainability very interesting compared to even the fintech space, right? When you talk about sustainability, the stakeholders are very, very wide, right? So you see, it's not just the banks, it's also the investment companies, right? It's also the sovereign wealth funds. It's also every foundation, every family office, every next generation wealth, all looking into this, right? And then you see and that's the financing piece, right? And then you see the risk piece with insurers. You see, you know, regulators talking a lot about the climate risk perspectives. But you also then see the corporate side, right? So even the most profitable companies who don't need to do any of this, right, in order to become more profitable, are looking at this, right? Because of commitments made not just by themselves, but also by their respective governments, right? So you're actually seeing both demand and supply being in high volumes. The question is, despite that, why are things not happening, right? And that is really around how easy is this going to be? How easy can we actually make the selection process, the measurement process, the verification process, right? So that the activities are real and it's not greenwashing, right? I think that's where the challenge is.
Yeah, I absolutely agree with you, both of you actually. So I do see that, you know, right now the ecosystem or the so-called stakeholders is actually the entire society, so to speak. I mean, in Singapore, we are talking about the Green Plan. So that's really led by the government, and that covers all facets of the society. And to the point about the investors, you know, I noticed that, you know, because in our company, there are a lot of younger folks, much younger than myself. You know, they will never be going to invest in an oil company anymore. You know, when I speak to them on a daily basis, I realize that they are really very conscious about their actions towards the climate. So they're not going to invest in an oil and gas company in terms of buying their shares. You know, when they are trying to do an investment, they're actually going to look at what's the underlying asset, be it part of a fund or part of an insurance policy. So that actually is a, you know, downstream effect towards the asset managers, sovereign wealth funds, you know, funds, etc., insurance companies too, whereby it is getting clear that in the next few years, right, there's a saying that I heard from an advocacy forum whereby they said that in the next 5 years, if your corporate entity doesn't have a ESG score or label, you know, you can forget about raising funds in the normal sense. Yeah, so that's where it is becoming more and more important for corporates or to satisfy the investors' mandate to be able to make the first move into sustainability, although it may hurt your immediate so-called costs. Yeah, but in the long run, you will be able to raise more funds, or in the long run, that would be the expected norm. Yeah, and then unfortunately, you know, that's where, as Teki was mentioning, okay, why is there not enough pace? Okay, it could be simply a lack of a technology nexus, okay, that could be able to overcome all these challenges today. Yeah.
Yeah, I think a lot of coordination, right? Because just so many parties. Let's just talk about it's a three-part problem, right? It's the green, the fin part, and the tech part, right? Just the green alone. Who are the Singapore government agencies involved here and looking at it? So if you talk about, let's say, someone like Capital Land, right, trying to get a green bond, who are the people involved, right? From the data perspective, there's could be BCA, right, for all the building specs. We were talking to SCDF, even they are involved in this part of the data validation side of the story, right? You talk about EVs, that's LTA's problem. You talk about cybersecurity, IMDA's problem, CSA's problem. So just so many, just in government side of things, there's just so many parties involved, right? So I think we want to shift the conversation a bit to the technology part, right? And I think since Ben, he's been looking at technology for years, right? Specifically, what role do you see technology providers playing in pushing this agenda, right? I think you were saying that perhaps the problem is systems are not keeping up the pace, right?
Yep.
Maybe we can talk more about that. What's the frictions there now?
Yeah, for sure. So definitely the problem today that we see is that the market is largely fragmented in all sense of the word. We are talking about data or projects. Okay, so these are actually what they call, there's a lot of fragmentation going on. Yeah, so for example, if a corporate has projects in multiple regions, how are you going to keep track of the sustainability goal of that corporation with multiple businesses and subsidiaries in multiple countries? Right? It's easy to do so in one or two countries, but what about multinationals? Yeah, so that's where needs to be greater coordination and connectivity between different systems. Where we feel that technology has to be covering all sense of the spectrum. Is for our company, we are a blockchain firm, for example. We can't just be relying on a blockchain to deliver this. We need partnerships with other firms like IoT, drones, satellites. Okay, and of course, we need partnerships with data extraction agencies and experts who are able to perform analytics such that the entire result is something that all participants will find useful. Yeah, so that's where we need to at least get started, or else, as we continue down this track, we'll always be fragmented, and the reports that we are looking at will always be one-sided or very localized. Yeah.
If I can dig deeper, right, Ben, so like specific scenario, maybe it's a bank wants to do this, but cannot because something is missing. Like,
Yep.
could you further elaborate?
Yes, some of our conversations with the banks recently, we realized that they are telling us in confidence that they are required, okay, by the by the momentum of the ESG push today, right? They are required to actually take on the role of providing impact monitoring to their investors. So let's say they provide a green loan. They need to satisfy MAS, they need to satisfy everyone else that the green loan is really green. They need to satisfy the investors of a green bond that the bond was really used, for this use of proceeds. And the bank is finding that it's increasingly difficult. The more deals that they do, the more pressure that they have, the more work that they actually bring on board. That was not really their main business, right? So the user journey of a bank could possibly be easier if there is a simple technology platform already created by someone else, okay, already accredited, already providing these insights, because it covers, for example, a green project, right? Certain IoT data at the project source, feeding information to a distributed ledger in real time, acting upon data analytics to provide the transparent monitoring report. Okay, so this could be further bundled together with smart contracts to be able to action upon certain conditions after, if they hit their sustainability targets. So this is the vision that we see where technology can come together, various technologies can come together to form a nexus for various stakeholders to be able to use. And that could be the way that we can push forward the green focus.
You want to give your view? I mean, I believe the sustainability subcommittee was set up not too long ago. Just curious with regards to this, what are you guys trying to lobby or trying to push for the, because obviously it's a member-led association.
Yep.
So just curious, what are you guys pushing for?
So I think there are a couple of things, right? One, obviously, you set up a committee to evangelize, right? To actually tell everybody that this is something that's important. The banks are doing it. FinTechs working with banks should start thinking about, not so much from the risk side, but the opportunities it provides, right? So a lot of people look at sustainability today, climate risk, compliance costs, but actually there are real opportunities. So how do FinTechs not sit and observe, but actually participate, right, and get into the whole thing and say, those problem statements that the banks face, the corporates face, can the fintechs actually solve them, right? And again, blockchain is a great example. Things that are done in, sort of provenance, track and trace, trade finance, right? All these things actually capture data, right? That shows the movement of goods, but also the movement of funds, right? And that's the important piece of, are you actually using your green funds in a green way, right? And I think the examples about, capital land and big green bonds, the big companies and the big banks can handle this. But if you think about the real impact, it's not about capital and the building, it's capital and the ecosystem. What about capital and suppliers, right? And the suppliers of their suppliers. How do you make sure that they are also green, right? And I think when you go into those what you call, scope 2, scope 3 activities, the further you are from the core, the harder it is to measure, right? And that's where the opportunity is.
And it's a big data picture, right? Do you have something to add? Give me the look.
Yeah, so I wanted to add that actually these, I mean, obviously in Asia, SMEs play a very, very large role of the economy versus vis-a-vis the larger corporates. So I would say that the larger corporates do have the resource to be able to, hire their own consultancy firm, to be able to gather the ESG data, produce a very nice sustainability report, and then also report to whoever they need to report, whether it's stakeholders, shareholders, regulators, or even to a certain extent, the banks to get funding or green loans, green bonds, and whatever excess of financing. So that's usually the lesser of the problem. But how can we extend this or extend the market access for green financing to the SMEs? Because obviously, from an SME point of view, I'm already working. I mean, I already have 100 people in my company. I don't expect to hire a chief sustainability officer to be able to gather the data from me. I don't have, I need to measure against how much it costs to hire a consultant to come in to gather the data that is required to produce the report. And then when I pass it over to the bank and say that, hey, can you give me a green loan? The question the bank will be like, what is the effort needed or cost needed to put in, to verify that the data submitted is accurate. So I think this certainly is a very, very big problem statement that can be solved through the use of technology, be it whether it is about verifying the technology or acquiring the verifying the data or acquiring the data in itself. So for example, if I can take put it in something parallel. For example, today you have CogPass and MyInfo platform where the data is easily available by a single click. You can just say give consent to obtain the data from MyInfo to the bank. And then the bank no longer needs to verify the data because it comes from a golden source, which is the government. So can we think about doing something similar? How can we leverage on technology to enable such data capture in a more efficient and trusted manner? Yeah. So there are many different kinds of solutions out there. For example, through the use of IoT devices, sensors, you can even use satellite images. You can use API integration, plenty of solutions. But the question is, or rather, the challenge here is that both the technology provider, the fintechs, as well as any tech firms, or including the financial institutions, need to sit together and think out of the box in creating a use case to solve to provide the solution. Because I would say it's not natural. Yeah. Really, the banks wouldn't think of working with an IoT company or a satellite imagery company to solve a particular problem that they're facing. While we do have, for example, certification, like for example, I think the example about Capital Land going through BCA certification and things like that. Today, yes, they get a green mark certified, and then they report to the bank, hey, I get green mark certified and I get a loan or a bond. But the question is, what if we can improve this rather than a one-time or annual certification process? What if it's an ongoing monitoring process where the bank can log in to see that, okay, I'm performing well on a weekly or even a daily basis, not just on an annual audit basis. This would potentially open the market access to to SMEs and smaller players as well. Yeah.
Yeah, and I think quickly talked about the heavy involvement of, I mean, Singapore itself, right? MSME is such a huge layer of the economy. How as the government and ecosystem enabler, MES is trying to provide incentives, mechanisms to help people experiment and try this, right? But I think it's a nice segue into kind of the main topic of sustainability versus profitability, right? If you were to create a long-term profit-making company, how should that be designed, right? And maybe you can hear Ben's thoughts. Specifically, how should you structure an offering, build a company around it such that it's not to solve a short-term problem, but it's going to be a company that serves its customers and goes the long way. How will you think about this?
I do think that this sustainability versus profitability, right, is really just a question only in the short term, because I do really think that in the long run, all profitable companies are sustainable and vice versa. All sustainable companies will be profitable, because that's the only way to go in the long term. And to your point about the SMEs, I do totally agree that, with Gui Fei also, the SMEs do really need to be able to be more able to get the access, okay, to green and sustainable financing. And it's great that, MES has come up with this green bond and green loan scheme. First $100,000 of course is being covered. Yeah, and really the more important thing here is that maybe through this access, first time, right, the SME gets exposed, or the corporates, typical corporates, mid-sized and smaller sized corporates, get exposed to this sustainability drive. Because many of the people that we spoke to, I mean, people from the SMEs, right, sometimes they are green without knowing they are green. And of course, sometimes they are just one step away from being green. Yeah, because it's just a matter of the choice that they operate. So in a way, the first layer, the first time that they become sustainable will actually open up the roadmap for them to always be sustainable. Yeah, and sometimes some form of education is great. And I think that we are, very lucky to be in Singapore and very encouraged to be here because of the leadership by the MES, and of course we have associations like the SFA who are really driving a lot of initiatives here, okay, towards educating the public. But of course, I think that an even more targeted program, if we are able to allow for anybody from the SMEs downstream to really start to learn about sustainability, about the benefits of sustainability, and then of course the way to get there, and having the incentives for the first green loan to be able to be achieved easily, and of course coupled with technology to enable that. Now I think that will really allow us, okay, to be able to get to that future, or at least my vision, where sustainable companies are all profitable anyway. Yeah.
I think very interesting point, right? But just curious where our panelists think in terms of where are we in that very long-term journey, right? In terms of adoption, in terms of unit economics, right? Of course, we are now in the time where we are implementing tax. Even on Singapore side, carbon tax law getting introduced. Of course, in Europe, that's been pushing super fast. In terms of that life cycle, where do you think we are? Are we still at a part where maybe that's in 2 years' time, then these companies become profitable? Now they still have to leverage funding, grants, or yeah, just want to hear everyone's thoughts.
Yeah, I'll go first. Okay, but so basically, I think we are definitely past the first stage already. Okay, the fact is that there has, from my perspective at the very least, okay, there has already been a lot of knowledge and desire from the institutions that we meet, and of course, more importantly, coupled by support from the government, okay, from the MES in terms of funding. So that's where it covers a lot of the otherwise unprofitable costs in the first place. For a fintech company like us, we are receiving a lot of support from grants. So that allows us to deploy the technology such that somebody else could use it, okay, and then enjoy the economies of scale. And of course, it is a, what you call wide spectrum, right? For certain technologies like IoT, they are also now enabled by increasing use of 5G, for example. So IoT company that we work with today, for example, they have told us that the cost has really gone down, okay, tremendously. In other words, to use an IoT device today is much cheaper than before. And this is also enabled by 5G and other forms of technology. So in other words, we do think that we already crossed the first stage and we are now getting into the area, the period whereby we can experience a lot of growth, provided that everybody plays the part together. Yeah.
I think two things, right? One is cost versus opportunity, right? The key is you see as a cost only if you are doing it because you think you have to comply, right? The real cost is the cost of transitioning your business so that you can tap on the opportunities, right? And that is a short-term cost with a long-term opportunity. And I think a lot of people are now saying that our tolerance for long-term is now stretched, right? People are saying, oh, in old days, you put $1 in, you want to see payback in 3 years, right? But now people are saying, I put $1 in this space, I'm willing to take a payback in 10 years, right? And that's where the funding gap becomes, right? And that's where the banks and the bonds can come in. So that's your cost to opportunity continuum. The other thing is, it varies sector by sector, right? If you are in the coal mine business, right? You got a bad product, frankly. Okay, so how do you actually get out of that? How do you start diversifying? Versus other sectors where, you could be in agriculture and plantations. The product is actually a good product. It's the practices that are not good, right? So how do you transition out of bad practices like replanting, not the reforestation, deforestation, and reforestation part? How do you change those, right? How do you also build supply chains that are nearer, right? That means instead of your factories being, thousands of miles away from your consumption, how do you actually build factories closer to the consumer? Because you use less carbon, right? When it comes to shipping, aviation, all those. So all this is really a big transformational play, and it is gonna be different sector by sector.
Actually, when you mention about, investors are willing to wait, are more patient lah for their ROI, which is true. When we first started out the fintech journey, you may realize for Singapore, right, fintech investments are focused on B2C market, meaning that those that, serve retailers, I mean, those brand names that you are familiar with, they tend to get the funding investment. But as we go along, and even last year, given the COVID pandemic, we are seeing that a lot of investments are going to the B2B space, meaning that these are the ones that have longer wait time, because obviously banks have their long compliance process or in onboarding process to take on a fintech. They have to make sure that everything works before they sign on the dotted line to say that, okay, I want to partner with you. I'm sure Stacks will know this. Yeah, and then, but yet investors are still willing to take a risk, take a bet, and invest in these companies. So I think that we are moving towards this trend where investors are getting more patient, and even, I mean, if we're talking about green fintech, it's going to be even longer. But doesn't mean that the money, I mean the investments, the funding is not going to come in. Yeah.
Yeah, I think we'd love to even dig into, when we talk about investments, right, nuances between public markets versus private markets, right? So privates, we've been seeing VC funds, right, who when fundraising, they've got, perhaps they have limited, they have LPs who say that you have to hit this certain ESG matrix, right? If we invest, percentage of your fund has to go to this developing countries, achieve this certain, hit these certain scorecards, right? So that's like private markets. And of course, from the startup lens, how can they better position themselves to look attractive to these VCs, right? And then on the other side of the house, public markets, right? So that's like bonds, all kinds of other structured products with the green angle. So we would like to hear comments on specific nuances there.
I think the history of green bonds, right, is not so long, and so far it has largely been funded by the public, by governments. I mean, okay, so public sector, okay, in the public so-called products. So bonds, green bonds, sustainability bonds, mostly are driven by the public sector. However, the public sector can only do so much. Yeah, so therefore, okay, we do need the private sector to step in, okay, in the public market. So that's where I think that although it's a public market, although it's a financial products, there's still not enough of private sector participation based on statistics. Yeah, and on the other side of conventional bonds, for example, so staying in public markets first. Okay, in the other side of so-called conventional bonds, you will see that largely the funding is done by the private sector. Yep. So we do see there's this opportunity in the public market for private sector to be able to make a lot more influence, okay, provided they have the means. Yeah, so definitely, okay, we do see a lot more uptrend in the private sector coming in, especially driven by the leadership of various sovereign wealth funds like Temasek, for example. They just declared that they're going to be 100% green, okay, and so a lot of other such developments. Then, of course, in the private markets or private VC funds, etc., because of the nature of the demographics, the younger executives or the younger investors are all demanding this to be more ESG friendly now. So we do see a trend that we can never roll back anymore. We do see that the oil and gas companies are also looking into so-called sustainability. We do see Sembcorp Marine buying into renewable wind energy. These are all real facts and trends, okay, that are driven, okay, also by private investors because this is what they see in the market. Yeah, so I'm very optimistic about it in general.
So I think the influencers are government at this point, right? And so the ones that are really flexing their muscles are the sovereign wealth funds, the pension funds, right? You see, and most of them have got two ways to flex, right? Or maybe three. One is most of them outsource their funds under management to other investment managers, right? And they choose those investment managers now with an ESG lens to it. So if you are an investment manager, and you don't practice proper ESG allocation, you probably won't be on the short list, no matter how good your return is. So that's their first lever. The second lever is setting up specific sustainability funds to invest in very long-term projects, right? And that's where you hear the massive with BlackRock, with the $1 billion investment. The third angle is operating companies, right? So BlackRock, Temasek issues letters to their CEOs, right? The CEO letters, they're saying that we need to see your sustainability transition plan, right? If we don't see it, we will start to sell down our shares, right? So they are changing their own portfolio. So you think of every single sovereign fund in the world, every single pension fund as well, pushing this down, right? Same with the large global insurers doing the same thing. You will see the cascading effect very, very quickly, right? So you see that push, and the interesting thing is, while banks are regulated by, bank regulators, MES and all, most of the corporates are not, right? Corporates are at best the listing, the listing regulators, right? SGX and all. But it's really their private investors, right? The shareholders, they are actually changing the behavior right now.
Yeah, so I think a lot of what we were talking about is around like capital allocation, mobilizing capital, and I think in MES project Greenfin they put it in three nice buckets, right? Like mobilizing capital, monitoring commitment, and measuring impact. The latter two, the probably very standard PC answers. Oh, we need more data standardization. More people need to work together. So let's skip that part. Let's talk about in terms of moving forward. How can the different ecosystem players do their part to better facilitate capital allocation towards green fintech, right? Maybe from a policy standpoint, what can fintechs do better? What can incumbents do better?
Actually, okay, so the thing about green finance is it's very new. There are a lot of standards out there. Everybody is trying to develop standards, taxonomies, and countries are trying to harmonize these standards, come up with this will take time. I think it's important that the technology that is being deployed needs to be nimble enough to deal with any changes. So for example, if today they need to report or disclose based on a Singapore taxonomy, for example, then it can easily do so. And if tomorrow they need to, for that particular project, report to the Chinese regulators or the EU regulators, it shouldn't take 6 months to recode the entire technology solution in order to do that. The whole idea is because once you gather data or collect the data in a granular form, the technology should be nimble enough to be able to adapt to whatever taxonomy gets thrown to them, and also any changes in the taxonomy. So the idea is that I would think that such a technology would kind of be more successful or more appealing to the financial institutions, because obviously our FIs here are global in nature. They have to report to multiple regulators. They invest in projects all around the world. So they need to disclose to different jurisdictions as well. So these would be sort of I would say key differentiators with regards to from one technology A to another technology B. Yeah.
Yeah, so I agree with you, Griffith. So definitely besides that, I also think the technology needs to be accessible. So it shouldn't be so difficult for a user being a financial institution or a asset manager, for example, to be able to use it. So it needs to be something that, immediately in the short run at the very least, okay, allowing institutions to derive benefits from it. So it's something that we definitely hope to be able to learn or incubate together through our partnerships with various banks.
Yeah, I think the idea of standardization and getting the taxonomy right, it will take time, right? So the way technology should help. I mean, data is key, right? Real data mobilization of capital won't happen, right? So they're all connected. The key is how do you take data at the right verifiable source, right? And once it's in the system, any company or any bank can cut and dice the data in a way that will make sense for their reporting, whether they're reporting to regulators or reporting to shareholders, right? Or reporting, to their own community, even employees and all, right? It's getting the available data, trustworthy data easily, right? So that they can actually be, reused in the right way.
Yep, totally agree. And I think just being mindful of time, we've got about 5 minutes. I think the last segment of the discussion, maybe we can talk about real world examples. We can talk about projects. Maybe give our panelists the chance to plug interesting projects that they've seen. Maybe I can start. End Financial, they did this project called End Forest. They gamified their mobile payments platform such that the consumers, the individuals are more interested to make consumer decisions to fund green projects. So they are planting trees in China, and I believe something like 500 million consumers have been impacted. So that's one interesting project. Another one we've seen a lot of marketplaces type models, right, for more easier capital fluidity in terms of like RECs, like buying carbon credits. So those are few projects I've seen. Maybe on to Ben.
Thanks. So we have also been involved in a few projects with industry, financial institutions, where we want to be able to handle the end-to-end life cycle of a green or sustainability linked bond or loan. Yep. So while it's still in the beginning phase, first phase, okay, we have already scoped out and designed the workflow such that bond or a loan is issued, be it project finance, trade finance, or corporate bond. Okay, it is able to be managed using smart contracts to manage and track the use of proceeds. If it's a use of proceeds bond, the use of proceeds are governed by the smart contract. If it's a sustainability linked bond, the way that it's being used is being tracked on the blockchain, such that it creates an analysis report. Of course, at the source of the project. So this could be a trade finance or project finance. There is always certain devices that we could leverage on. If it's solar panel, we can track that the solar panel is still there. If it's a cargo, you don't want to be able to use cargo tracking devices like IoT to make sure that it's not being double financed or being replaced. Okay, so that's where data at source is getting added to the distributed ledger. Okay, it interacts with the smart contracts to action out sustainability linked dividends or interest rates. Now the secret sauce here, I would say, is simply the interaction between multiple counterparties, because it would be easy for the issuer or the project owner to declare that they have already gotten the targets met. Here we actually allow the financier or the investor, to actually verify that this has been done. Of course, this requires a lot of partnerships between other participants like the data analytic firms, the data extraction firms, and of course the original source of data themselves, the IoT firms. So that's why we want to be able to empower this infrastructure, and we have done some design and testing already, and we're quite eager to also showcase some of these as we go along in the next few weeks. Yeah.
So I think to that point, right, I think the world is not standing still, right? So while we have this big sustainability trend, we are continuously making improvement with our sensor technology, right? Our machine-to-machine communications, our satellite imagery. So we are now just taking those and applying it into a sustainability framework that says that if I can use all this, how can I better measure, right? And how can I better verify things? So there are lots of those projects going on right now.
Actually, at the end of the day, what we see that the main challenge or key challenge is really not about the technology. The technology is actually proven. There are a lot of technology out there. We've been using artificial intelligence to do, or AI models to do credit risk analysis. So why can't we do the same for climate risk analysis? Similarly, blockchain has been proven. You can enhance traceability, provenance, and so on like that. So really in a green fintech world, the challenge is really putting people together, agreeing that yes, for this particular project that requires financing, we will be adopting this, the different stakeholders, the project owners, the building developers, or the asset owners agrees to deploy this particular technology or solution. And the banks or the financiers, even the asset managers will agree that yes, data collected through these technologies will be trusted, verified to minimize the need for manual verification yet again. And similarly, it can be seamlessly reported to the regulator or shareholders and so on like that. So I would say it's less of a technology problem to be solved, more of a coordination and getting everybody aligned and getting everybody to agree. And that's why in cases like this, usually POCs or pilots would be a good start, because otherwise the conversation would take 5 years before the project starts. Yeah, so that's where, coming from MES, we do see that there is a need to support some of these pilots or proof of concepts to just get the ground, to hit the ground running, rather than, spending time on the drawing board brainstorming and evaluating the best solutions out there. But in fact, the technologies are, already proven and exist today. Yeah.
Yep, and we really appreciate the comments. So I think to wrap up a bit, we started looking at the trends. We went on to talk about roles of the different stakeholders. We talked about balancing sustainability versus profitability, and even down to projects, right? So maybe for the last 5 minutes, we'd love to open this up to the floor. If there are any questions, feel free to raise your hand, and someone will pass you a mic, and yeah, feel free to address the question to anyone. So do we have a first volunteer? Anyone? Questions? Last call? If not, no worries. We after this, we'll be breaking out into small groups. Bearing in mind, of course, our house rules. So last call? Okay, cool. So let's wrap up this discussion. Hope you can join me in thanking the rest of the panelists. So last quick plug for Ben. They are a fintech company. They've got, if you are interested to do a green project, you can contact Ben for Coexistence. They've got grants, they've got FSTI, they've got the whole framework. And for TechU, he's part of the subcommittee in SFA. So if you are an organization interested to join, feel free to reach out to him. And yeah, see you guys in a bit. Thanks so much again.